Hello. Good morning. Good morning. Welcome to another ES Futures trading stream. Today's Wednesday, March 27th. It is 9:26 Eastern Time in the US. Alright, what we have here? From yesterday, we have a late spike. Yesterday was a terrible day. A really bad day. There was, bad because there was nothing going on. There was nothing going on yesterday. Value was higher, and we had a late spike to the downside. The most important thing, value was higher. We were having these narrow ranges, days with really narrow range, and really wide, big prominent POCs, rotational days, and this late spike. Now, a couple minutes before the opening, we are witnessing that this the spike is being rejected. Yeah? Overnight inventory is 100% long. The market not just as rejecting the spike, but we are almost on the opposite side of the range as well. Let's see what the market does now. Checking our time frames, or bigger time frames. We see here, for example, no, there's no change in the monthly, no change in the weekly trending. The trend remains. Yesterday, after the market closed, I did something here. I just extended this trend line to the left. That, look where it went to. This is the trend remains. Market is buying from anything. The next time the market candles just move this trend, okay? I'm not worried about I'm not trying to figure out what the market is going to do, but rather try to be in sync with the market and understand what is doing it. There was a late opportunity yesterday, this one, but it was a go with the market opportunity, understanding, right? Understanding that the trade actually was to the upside, and all of these shorts here, all the longs here were forced to liquidate, and now let's see what happened with shorts now. Do we have anything today? We don't have anything other than a 7-year note action at 1 p.m. Tomorrow, GDP, on Friday, we have PCE. Okay. Opening up here, the market is rejecting. Market's not accepting lower prices. The spike has been rejected. Okay. Now we have yesterday. Notice what happened yesterday. We have an outside and a day to the upside. We have an outside day to the downside. Okay, that was the most important thing from yesterday. We have an outside day to the downside. Notice how this opening has not taken yesterday's high yet. No. Inventory, which makes actually makes this high very very questionable now. It was yesterday we had a poor high. Today this we have excess, but the market selling from this high makes the day. If we put this together, we don't have excess at this high. We don't have excess here, neither up here. That's really bad. What do we have in the other markets? All right. Gold opening at center of the range. Crude is rising. Look at this bond market here. Opening inside previous range is an advertisement for shop. This market down was the weakest. This is interesting here. This one looks like the weak. It was bought from this high, was bought from support, and now this is the only one that has a gap. It really has an upside gap here. All these markets are buying from, it took this range. It get back inside this range. Nasdaq here. We have excess. Okay. Let's see. Nasdaq is back inside the spike. This can be very well a counteraction there to overnight inventory. It has the exact same opening like yesterday, very much at the same level. Really nice selling going on there in Nasdaq. It's very close. It's very close to overnight POC. Really kind of nice 10 points over there. This high is what question here. So. Oh, and one other thing that from yesterday this break took or put the market back, and it closed this distribution here. It closed this distribution here. That's what I got from that market. What the heck? All right. Now Nasdaq is back at support. Let's see if we have some downside continuation here, at least to this spike base here. Notice how, oh boy, notice how exactly came to this support. Nasdaq here. No, inventory is 100%, overnight inventory is 100% long here. Uh-oh, what the heck happened here? Man, I am having trouble. I don't know what's going on with my, something is wrong with my trading platform. I'm going to close it, and it's just not working properly. This is the second day in a row that it's doing. I was having also problems with my internet yesterday, and today the same thing happened. Check your daily. If you check your daily charts in Nasdaq, for example. Oh, it's here. Look over this. I'm calling this level support resistance, right? And it's buying exactly to the tick from that level. Here, there was a big contraction to overnight inventory in Nasdaq. That market is also to the upside. Even though it has it looks different, right? It's oh, okay, you can say this is a bad day. Then this late break that we have here in the ES, it also happened in Nasdaq. This is an upside day. The day is to the upside. It had the same opening around the same area, almost, couple ticks from the same open as yesterday as well. And it's an inside day. It's an inside day. Lower prices were rejected. Markets tend to this market. The other market is very thin, but I monitor that market because when this market is getting synced, whatever's happening tend to be lasting, tend to have more strength. That low in Nasdaq can, if there's something here, remember, this is a day to the outside. This is a day to the outside. Outside day to the, it's an outside day to the downside. Yesterday. One time frame higher, lower ended yesterday and closed as an outside day to the downside, but the spike was rejected. Opening way up here shows rejection of spike. I think volume is lower. Yeah, we had really low volume again. Very emotional here, lots of emotions, emotion running highs. The last thing traders remember is market breaking hard out the close, and they're trying to go in that direction. Okay, give me a second. I'll be back in just a minute. All right. Back here. I'm back. And my trading platform. God, what's going on with the Rhythmic, brother? The heck is going on here? Nasdaq has corrected, but another reason why I watch that market is that sometimes, in this case we have long inventory, right? Nasdaq also has long inventory. Both are the same. Sometimes when the counteraction is done in that market, it kind of like relieves the pressure in the other one also. Kind of like a. No, what I'm trying to say is this, for example, right? Now we have this inventory. Most of this inventory, notice where settle is, and all of this inventory is long. All the session, all night long, was to the outside. So these are longs. Most of these are being removed. There was a weak base here. Now this one has been corrected. Yeah? In that market. Now, Nasdaq has the tendency to overshoot. So I would consider this mechanic, if it comes down to here, that would be better. Technically, it's good. Now, once this is kind of like corrected, you cannot leave this market alone to, to do its thing. It's not trading based on this market, but because I do this, but it is, like I don't trade in a vacuum. Try to be aware of what's going on in other places as well, other markets. Gold, for example. Let's see what gold is doing. That market being really high also has an impact in this. But that means that traders, the ones that matter, are getting nervous here, kind of hedging as well. It's way up here. The bond market is kind of in range now, a very narrow range. Look, oh come on, look at this, man. You got 1, 2, 3 highs here, 3 lows, 2. Oh boy, this can go in very. It just tells me this is another indication now. The mechanical trading, the traders that are in this market, that are conducting the trade, are have good odds of being stepped out of their positions, or good odds of switch position, or higher odds of not holding, things like that. Right? They are not here to stay. They are just here for short-term trade. Okay, the only market now that is shooting higher is Dow. Now, has this action been completed? Now, opening inside previous day range is also, we always say that, right? It's an advertisement for chop. Market is selling chop. Sometimes, hey, yeah, good morning, sir. How are you? I have something to say today. Yesterday, I feel I don't know. I don't know what's going on with me. I guess it's health related, maybe. But I was feeling really tired, man. That's why I opened late. I didn't stream early. I opened late, and when I saw the chop was going on, I just went. Yeah, it was raining here also. I just went, quote unquote, take a nap. I ended up, kind of like sleeping like 3 hours, man. I woke up just before the spike. When I woke up, I saw this market was here. I believe something here. And that's when I look at the daily time frames, and there was that market was selling. And I saw, kind of like like it clears your mind also. Now when you're not expecting anything, it clears your mind. So when something happens, you can actually you have better odds of watching what is happening. Now, I would say I hate to say this, or I don't like it when I say, because I realize that I'm having a bias here, and this is to the upside. Yesterday this was a really big spike to the downside. Really spike with value higher, which increases the risk of that action, whatever happened, because value was higher. But now having this opening, and opening way up here, it's a rejection of these lower prices. Rejection of lower prices. And look at what we have here. We had 53 there. Yesterday we were also talking about, and this is very personal, very personal. I call this not a dead man land here, a dead area. And in this area here, the risk is high in this area. Because what I have noticed is, if you pay attention, once the market makes up its mind, there could be some opportunities to buy here, or some opportunities to sell here. But there is also, before that, there's a lot of back and forth around this market, because traders will see, there's nothing here really, but traders see or give this kind of numbers value. And notice where this market was bought from, for example, right, this day. If you check the trading, you can replay, you will see how this day there was a lot of back and forth, a lot of market stopping at that level, selling from that level, buying from that level, selling, buying, selling, buy. Okay. Now this is a nice buy here, and risk. The same thing that happened yesterday in the ES can be happening here now. What I mean the same thing, because once you got something, but when you see an opportunity, the next thing is find location. A location is an area that is strategic place it, right? Where the market can tell you, you know what, you're wrong. This is not good. And that was this low here. Once the market took this low here, if the market comes back through this level, that was it. The trade is over. The market's telling you, you know what, you're wrong. The market can come back exactly to this level, maybe one tick more, and still have this movement. But this action is what takes me, it tells me, the odds that my trade is going to be good, is going to be working, or is going to work, are drastically reduced, right? It still may do that, but I won't be. Most part of the time, I won't be part of that. Yesterday didn't do that. Yesterday that didn't happen. And you notice the tempo, how the tempo was terrible here, it was terrible here, and suddenly it just changed it. Out of nowhere, it just changed it. You can see the market start to gain momentum trades start to pile on the lower side. And before that, notice also this. I was watching this thing also. Volume, lower. And suddenly, look at this. It's not lower anymore. This is where it was supposed to be. And then, this start to change. It start to change a little bit high, and it start to go higher and higher. It start to increase. You know, at the moment I didn't know what this was. That's why I mean when I say I didn't know what to do with this, but I saw something changing. The potential of change. And trading is about change, or the potential of change. And here is even higher. Here's when it starts. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Here, here the volume is start to be very obvious now. But something was building here. When I came back here and I saw this, man, what I actually was expecting here, quote unquote expecting, was a short covering rally, because value was higher, and something that happened, but something very subtle as well, this day seems be it's a trending day. This period here did not take this high. One tick is not excess. This one did not take this. It's only one tick. Still the trend is to the downside. This matches. So this is an extremely weak high, right? But the trend remains to the downside. That's why I say it's very subtle here. There's extremely weak high here as well. Same highs. 4 highs here, 4 white highs here, 4 white highs here. Right, can you see? And this one takes this high out, but only one tick. You need at least 2 ticks to be considered excess, technically, right? Technically. So this is this trends to the downside. So only this period was to the upside, the opening, and the rest of the day was to the downside. And now we have an outside day again. It all makes sense in hindsight, right? We have a spike here. And this is a spike. And market opens up here. Above this spike, rejects the spike. And what do we have here? There's a bunch of stops here. You see that? There's a lot of stops here. Notice how traders are keeping the pressure to the downside, right? But by doing so, they are adding just more stops here. The logical place for all these stops to be is also here, and there are more here coming. All these doing this thing up here. I would be to me these days, this time is really hard, and these times come just after the rollover period. Before the rollover period, there's this activity. There's a lot of volatility that comes, and usually there's some big rally that comes followed by the big break. But after the rollover and this period between, just after the rollover has been completed and the beginning of the earnings session, which is which starts with the bank, which is going to happen in about 3 weeks from now, 2.5 weeks from now. We have this kind of markets. There's a lot of back and forth, a lot of rotation that happens during these times. Now look at Nasdaq. Look at that baby over there. It's about, last has been taken. Now this is still questionable here. Look at this. If you trade Nasdaq, this is not going to stay, man. Just keep buying exactly from settle. That's a really bad low there. Now it's better. Really, let's see. if this market can take, because now very what that market is doing, the spike was rejected, but now the next thing is the single print. That market is about the single print its way out of previous range, and that is a sign, a strength of the movement, which in that case is to the downside. What the heck? Oh, look at this. We have higher volume here. Oh, this higher volume than yesterday. Okay. I had a couple shorts here, but I couldn't move my stops. When that happened, I decided just to close it. That's when I say my charting platform is God, and it's not. I cannot trust it, right? I'm not confident of what can happen there. Downside continuation here. Well, still inside previous range. This low is very. This is the low of this upper distribution here. Nasdaq and ES are doing two different things now. And I took my short up here. I would say somewhere in here when this market could not take this high. It was weak. And Nasdaq was selling hard, and this was holding here. This was holding. And there was that buy that happened at support in Nasdaq. I said, no, that market is good. Also, that market is going to keep going lower. Or at least check that. Okay, now this is the second period, and Nasdaq did not take previous day range out. It could, but it did not. Let me see some rotation here. I'm not saying this is going to come back high, but here. Let's see. Now we are really questionable low here. I have the impression that traders are selling because of what happened yesterday at the close. But what happened today at the opening is what I have at the top of my mind now. What's going to be? Got no idea, man. All right. I am not considering this closing distribution. This distribution will already close when the market open up here. So this is not a reference here for me. We have a downside movement, continuation with yesterday's, but the context is different. And sometimes when those just get stuck in your mind, it's really hard to get rid of those and just go with the market, man. Because the market is breaking here. It's an inside day, but it's breaking. And actually there's nothing here. Nothing holding this market here. You have opened this, there's nothing here. Really. And what happened here, I have this very weak level from the FOMC day, and this one as well is extremely weak. This is mechanical trading here. Next is going to be last. Alright. What? Okay. This can be an area here. Okay. This area here. There's no buyers here. No buyers here in this market. Nasdaq has taken yesterday's low. Monday's low as well. The whole overnight inventory is history there. Now check this out. Where this high is. I just noticed this. Where this high is. Right here. Momentum trading going on here. Now in this market, I still have this distribution close. I still having this reference. Oh no, my bad. I had which one? This one. Man, I didn't know. God damn it. Okay. Oh boy, this was a short-term reference here. Oh, why okay. Oh no, I decided to let it go because it was support resistance too. Once this level has been taken, notice what is happening now. Really strong selling here. Momentum traders are piling to the downside. Let's see if this market can take, the potential here. The ultimate destination could be this area here. But first, the market needs to deal with yesterday's. This can very well be a counteraction to this 100% long inventory. What happened here, right here, also that's why that's another reason I'm taking these shorts here, is this. Yesterday at the close, this is just before 5 p.m. There was a lot of pressure to the downside here. These big blocks that came, that's why I have these blue arrows here. These three here, this one. There are tremendous pressure to the downside. Regardless, the market opened way up here. right? So these kind of things come back to my, you know, kind of like what the market is doing. Put this thing in your radar, right? Because that kind of positioning, I don't know what that is. I don't know if that's long, short, right? I don't know, but that can be some. I mean, to place 3,000 in a block or 3,000 contracts buying or selling, that is somebody who has power, has willing to do something there. I don't think if you are closing a position, if you're closing a position, I don't think you are going to wait until a couple of minutes or a couple of seconds before the closing. More likely, the odds that there's some positioning is higher than closing. But who is going to do that at that time of the day? That's what I ask. And also, at that time of the day, you got the overnight session, which is thin. If you have the power, you can do actually. You can move markets. These are just speculations, right? I don't spend too much time doing that or giving too much weight to those things. But this kind of behavior put this one in the right. This is another reason, right? Instead of looking for reasons to what this movement, what can go wrong with this, you can also start thinking, right, what can happen, right? What is why this movement can keep going, can keep working. Now, it stop it right there. I stop it right there. Now, Nasdaq has did the same thing that the ES Nasdaq did today, what the ES did yesterday. Okay, yesterday the ES closed these distributions from the FOMC day, and Nasdaq has just done that. Right, has just done that. If there's something to the downside, you just need a little bit of volume here, a little bit of conviction to take this range out. Notice that there was penetration in this value area, but was rejected. Okay, it is still an inside day. An inside day. Next thing the market has to do for downside continuation is take this level out last. When the market does this movement to the upside, opens way up here, this is not a reference, this is not a reference, this is not a reference. Only maybe half back here, and overnight POC. Values developing lower, it's overlapping lower. Market went from lower to overlapping higher, now it's overlapping lower. There's a lot of indecisions, so there's nothing clear here in this market. In the bigger picture, if we zoom out, we see that. Now, this market did not take this far. We have an intraday trend to the downside. This is another attempt to push this lower here. By the way, how much volume do we have in the overlap? 200,000. 226 027. Coming back to last. Very emotional. At least most traders are happy now. He is right back at the trend line. He's buying right there on the trend. Look at this. It's right there. Nasdaq is back. It has a range. He's back inside this range. I should draw a trend line here as well. The Dow is fighting hard to keep prices higher here and range in Russell. It's right in the trend line, okay? It's right in the trend line here. Be careful here. It's an inside day too. This is an inside day. You know, it's hard to see. It is really hard to remain calm here and not to get dragged by the emotions. You know, the market is breaking here hard, right? But it's still an inside day. The pullback in Nasdaq, man, that pullback is quite significant there. And the pullback is coming, I don't know. Look at where this market is selling from. Selling from yesterday, selling from this low. Next thing, half back, selling. I mean, who trades like that? Half back of this day, our FOMC day, is also very, very high. It's a reference that many traders can see there. Now, fading the movement, okay? There are two types of traders. Traders that go with the movement and traders that fade the movement. Regardless of what I can see, or what my assessment of the current movement, or my assessment of the strength of the current movement is, the market is doing something here, right? I may consider it weak or strong or whatever, but the market is doing something, and that something is selling, right? Go with the market is go with this movement was doing here now, and fade the movement will be okay. The market has break. It's time to buy. Why? Why you buy? Just if that's your reason to buy, that you have a tendency to fade the movement, to fade markets, and the odds of being consistent with that strategy or that kind of mindset are low. I have really bad times. I had really bad times doing that. It just don't work. It's really hard as well to get rid of that mentality. Oh, something else that I completely forgot. I was checking yesterday when I was doing my homework. Is this? Let's check this overnight. Look at where this overnight is. And this tremendous. This high here is not just pull, but it's also weak because it was sold from overnight POC. That's a lot. This is quite prominent POC here. You know? That's what we have in the upper side. Market have calm a little bit now. Quite a pullback in Nasdaq. You know, one of the things to monitor a trade, for example, this is easy to see here because it happened faster than the years. You know, you ever have a trade to the downside? One of the first things, the market came back to that. It came back and forth, back and forth. It came down to here and took this one back and sold from this area. Next thing it stopped here. There was a lot of things going on here. And now, one of the things I wouldn't, you know, like, I wouldn't like to see is the market coming back inside this range. You know, because we have this can be 1, 2, 3, 4 day range. I don't want the market to come back. That can be one side, right? But the market is not just doing that. Before doing that, the market has a lot of sell that came from. Yeah, actually, that was it, right? Next thing I don't want to see selling coming from this area, right? Now you have two warning signs that the trade can not be working, can be in trouble. Now, I don't want the market to come back inside this range here, for example, right? I don't want the market coming back. So this is a big pullback here. I want to come back. Next thing, that's a negative. That's negative for my trade if I have a short here. The other thing is, you know, coming back inside this range is one, coming back inside this range is another one, and coming back inside this range is another thing, right? Very mechanical trading here. Notice where this low is, right? Overnight low as well. And coming back inside the range actually targets the opposite side. Let's start to, it makes me nervous. And also the fact that this market had the chance, it really had the chance to take this low in A. It just didn't. Nasdaq is very different, right? You need to know your market, but that market is very different than the ES. In ES, for example, something that I have seen maybe since October, November last year, I have seen a lot, is this kind of trading, mechanical trading, right? It finds a reference, in this case, let's see, it can be last, and this can be a lasting low, and the market can start a new action from here. You know, let's see if there's some rotation, for example, come back this POC or this one here, or do whatever the market does, right? But have a tendency to last long. This kind of buys in Nasdaq, or Nasdaq buying, trying to do this thing in Nasdaq is, you know, the odds are high that this market is just come back and check this. You know, that actually is a short trade to check, you know, to check out the reference. The market can, in this case, the Nasdaq was bought exactly from this level. It came back out here and here. The odds that is going to come back and check, just to check, right, repair that one are really high. Good odds that happen. And when you see it start doing that, that's kind of like a really quick, what we call a scalp, right? Because you don't expect much of this. You really don't expect much of this. Just taking this reference out with 1, 2 ticks or points, and that's it. That's it. That's the trade. You know, oh, I should have hold. I have 50 points here. No, that's not a trade. That's a different kind of trade. And those are different mentalities, different type of traders. When we try to do short term or fast trades and also slow trades, that 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 mess. I didn't believe when Jim said that, right? Jim said that those different mentality that you need, and it really is. You know, you want to see the market different. You see the market in different ways. You see the same market, but you see the opportunities in different ways. You know, if you're a slow trader, you can see those references also. Oh, okay, these are where these guys are coming, right? That's what they are doing. If there is anything to the downside, the market will come back and check and keep going lower or higher. Now, if this remains, we have higher volume now. It's at the pace, the same increase at the pace that yesterday. Interesting. How much is this? 10%? Maybe, how much can be? Yeah, 10%. Let's check this out. Oh, that's 20%. What? I thought it was 10%. 20, yes, sharp. Higher. Before, I just got too anxious or too nervous or too disappointed. Right? Oh, I see this man. I knew I should have go short here when I saw the market coming this distance, right? Um, no man, next time I'm going to do it. Oh, I'm going to go short here now. Boom, short the market here, right? But remember, right? This is an inside day spike. Downside spike has been rejected. Value was higher yesterday. Notice what's happening to value. It went from overlapping higher, but it was just an opening, right? Now we have value. Value is moving lower here. It's overlapping lower. Okay, so it's giving. This market is giving us something here. Value is lower. It's moving lower. It was starting to form lower relative to yesterday. Okay, that's the main thing, relative to yesterday. So what is the direction of value to the downside? Okay. Another period, if the next period cannot or doesn't trade inside A, value will move, or can move or could move lower. Okay. Now, there's another thing that I'm just checking this here. I can just disregard this spike here. You know, I can just disregard this spike here. You know, just made like this spike that it didn't exist, and just take this part of the day. And that would change things here. Or by doing that, would things change? That will give, well, I mean, that still gives us a 3-day range here. It doesn't change. It doesn't change things much. There's a nice taper here. Sometimes when I say why I say there's no buyers or there's no sellers, I may have a position here. I may have a position. I might stop, you know, whatever my stop is. The market, in this case, the market was going lower, going lower. I moved my stop to break even, then 1 point, and I start doing that, right, to manage the trade. And most of the time, I am stopped out at break even or with small gains here. That's when trades with this with futures contract. And but sometimes I may have my stop. Let's see, for example, this is my stop. This is my market is going. If let's assume this market is going higher and this is my entry. I don't know what this green is. I guess it's VWAP. I don't know. This is the low of the day. You see? Yeah. It's a low of the day. I may be here, for example, and the market comes back. It's going higher. It comes back, gets to this level, but it doesn't take my stop. It just doesn't take. It stays there. It comes back, touches, goes back up, touches, goes back up. That's when I say, there's no sellers here, for example. My stop is there. It might reach that level, but it just doesn't take it. There's not enough interest in the selling side. That was happening, but in the opposite direction. For example, what's about to happen now? This green thing is taken. This market will be trading below, and that will be my stop, right? And the market comes back and check that one, comes right to the level, but the stop remains there. The stop remains there. It's not taken. It doesn't happen. It doesn't happen quite often, but when it happens, okay, that's something here. There's no bias. I mean, this is another indication, another way, one very specific way. You can see, you can just use your charts to see. The market just dries there. It doesn't go lower, right? That would be that example I gave you was, would be something like super zoom in, right? Do a zoom in, extremely zoom in, deep in the market. The strength of this movement now is what. Okay. If I remove this spike here, now this market will be pretty much below this range. And not just that, but also below this range. I'm buying right from there. Okay, right from here. We have two distributions now. Now, if I'm going to be short, what location here, right? What's the location here? If I did this market already is back inside this range, inside this 2-day range, which is something I don't like, or it goes against, increasing the risk, right, of trading back towards this high. If I remove this spike, I also this low here comes back. It becomes relevant again. This one is right there too. I guess I'm looking for a trade here. I guess I am just overthinking here. I'm just going to let the market play. It is 10:30. So, for example, in a downside movement, 10:25. That's when the pullback we go back to the levels. We are going back to the initial direction. What are we expecting from volume to validate the pullback? Volume is a lagging indicator. right here, for example, now this is where you know, if I take this level here, this volume here, this is what I do. I move to the next one. This is where it should have been, but it's higher, right? So it's about 20% again. So this is consistent, you know. There's consistency here. So there's some increase in volume. This is going to be higher. So one, two. This is going to be higher. There's a trend here to the upside in volume. All right. So if this remains, it will have direction in the market. It can increases the odds that this is something serious. But what is the market doing here? It's still inside previous day range. It's an inside day. We don't have direction yet here. No? But price says otherwise, right? So you know, this is the emotional part here. This is how we get caught by price. This is an inside day too. It is true that I'm watching the Nasdaq, but if I pay too much attention to this can have an impact in this also. If I pay too much attention here, right? This market has come back inside this range. Inside, I don't know if it came back inside this range, but it also has two distributions here for me. All right. Notice where this low is at. Exactly that level. But it's an indication who is here doing what we are watching here. Right. This is very short time frame, short term trading going on. This could be an indication that there is something more, but it's still inside there, right? Who says, for example, right from this high here? Now this you pick your reference. You got overnight high, yesterday's high, right? Now we were calling this. I was calling this no man's land here. That area we are outside that. We're outside that. Once the market took this low here, no, it was also supporting Nasdaq at the same time. I was trading outside this. That gives us some directional move to the intraday in a day that is an inside day. Right? Now the thing to monitor here, if you got a trade, the only thing here, if you got a trade taking this low, that's it, right? This was one, and this is mechanical trade, right? You got this high. You can monitor here, and because the risk is very low here. That's the thing. The risk is very low. We didn't know this market was going low or higher. We just knew that it was an inside day. A spike was rejected. You know, the late spike, the late movement that we had yesterday to the downside was rejected, and value was higher. Overnight inventory was 100% long. Yeah? This could have been a counteraction to this long inventory, but the increase of volume may say otherwise. That this can be more than just a counteraction. Okay, this is how you start to check. Right, there's another things that are happen that may be happening here. We never know for sure. When you are short, when I am short, when I am absolutely sure something's happening, that's the laggard stage of the market. Okay, that's an indication of the laggard stage. Oh, so that can be an indication of the laggard stage, right? Because I am not taking a risk, you know, quote unquote, not taking a risk. I am 100% sure, and we always have to take a risk here. You know, having like 65% of an opportunity, I think that's good. You know, now we got this high here, questionable. Did you notice, for example, how tempo or how the pace of this break has decreased? Once it came down here, it's just kind of like a slow down, right? It's a slow down. And now where is selling from? Can you see? When I do when I was doing um, my charts, my market profile by hand, I did something. Yeah, let me see. Let me show you what I did. What I did is, because I don't have hardbacks here, right? I configured these Fibonacci's here. These Fibonacci's, just to have the high and the low, right? High, low, and this is the center of the day. Now you want to take you want to take this period as the market keeps developing. I do this, so I have my reference here. I have my hardback here. Unfortunately, I didn't know how to get rid of this thing. No, I keep this because I had several of these things, this lines, and to relate to something I also sometimes I change colors, for example, right? I can identify this better. I change this. Let's call it this color, just for the sake. Boom. So I differentiate the daily from the intraday for the bar, right? This bar. This is not that important now. The first one, this will be A. It's not that important. Now what the market is doing is just took this. You can see it's coming from this level. Right? And I use an Excel spreadsheet to draw my profiles and to see it there. And you will see, you will learn some amazing things that happen. This movement in 10 points, 15 points in the ES. This is something also that I started to see. When I realized, for example, that a 10-point movement, that's not really nice. That can be the culmination of the movement. How much this movement has? 85, 73, right? Almost 10 points here, this one. How much this one has? 83. How much is this? 94. Another 10 points. 10. Can you see? Those are really silly things. But when you see a movement, and when you have 10 points profits, that's a good movement. Right? That movement can be very well done when that happens. When you got that 10 points, that can be it, right? And we traders have this tendency, right? When that happens, grids just takes over, and okay, the market did 10 points, you can make 20. And you have your 20. Oh, okay, the market make 20 and can make 40. And then suddenly it starts to trade. The action changes. The direction of the action changes. And you don't have 20 anymore. You have 10. And you start thinking, oh boy, I wish I would have closed it at 20. It may go back to 20. And you don't have 10 anymore. You have 5. What? And without knowing it, you're negative, right? It happens to everyone. It happened to all of us. There's only one way to learn this, and it's the hard way. The hard way. Oh, and your question, the pullback. We go back to the reverse. We're going back. I mean, let me tell you something here. I think what I'm noticing here is that you have these expectations, right? That the market has to do something. That's the impression I have. That you expect the market to do something, and the market doesn't have to do anything. But the observation is right. Right, that observation is correct. When you see that happening, when you see that the market goes to the reference, to the initial reference, and then resumes the direction of the movement, resumes the movement in the original direction, That's an indication. That's an indication of who is behind the movement. Okay, now you know, okay, this is some sort of mechanical trading. The odds that bigger time frame traders are present or are behind this movement are not that high. There are better odds that this is just, short-term trading, and you become aware of that. Okay, that this can change at any given moment, and you become alert. That's the thing that you need to you need to highlight from the observation that you have just made. Instead of expecting the market to do something, the observation is different, right? We all see the same thing, we all see the same market, but have different observations. In my personal experience, when I did what you have mentioned here, I wasn't consistent. The odds that somebody that do that in expectations, they become consistent, kind of like it is against that. It plays against that. Are not good. But if you got that in your mind, you made the correction, you made the adjust, and now you know, okay, this can happen in this moment, so you became aware of that. You just can't keep doing that. You can keep going. If the market keep doing that, that's go with the market, right? Now you are not the fact that you know that somebody weaker. It doesn't mean it's behind the movement. It doesn't mean that movement is not going to be lasting one. It doesn't mean that the market is going to reverse, and that's something that also plays a lot against us, because we see that we have this bias. Oh no, this market is not going to last. The market is going to go higher. If we take this day for example, right? The market is going to go higher because I know that who is behind is not strong, right? The odds, right? But that's just one piece of market generated information. Just put that. Just know if that happens, I don't want to be against that. Or if that happens, I know I'm going to close. I may even reverse if that happens. Right? But the action right now, for example, the actions to the downside, we got all this information. Right? This can be more than just a counteraction to this overnight inventory because you have a slightly higher volume. I mean, it's not slight, right? How much is this? 20% again? Let me check. Actually, it's higher. B is higher. We have 24% there. A was 20%. The market keeps going lower, and we have higher. We have 24. If this is going to increase right now, this is going to be the same, and we should have a market something like this, a little bit higher. And that is, what time is it now? Yeah. It can have something like this. This is half, another half will take the market to this area. This is half from here to here is half, another half will be here. Right? It's higher. It can be maybe 25% or 20, around 25, 26 maybe. There is some volume here behind. It's still an inside day. Why is it important to know who is controlling the market? These cookies give us an idea of the strength of the movement. If there is some bigger capital, for example, there's no way to know. There is always, all participants are all the time in the market. But who is dominating is another thing, right? And you may see this participant, this kind of participation. It not necessarily has to last the whole session. When they come, and they do their thing for 1 period, 2 periods, 3 periods, and they're done. And they just let the market sit there. Sometimes all day long. We don't know that. We're assuming that they are going to be all day long, or they're going to be just one moment is also another misconception. And it's really important because if somebody has higher staying power, they are not going to be here, for a short term. The odds, the movement is going to hold, the direction are higher. So our odds improve when that happens. Those are not just odds, right? Right here in this movement, I know, we got these observation fields. We have this second observation field. It just took half back and this keep going lower, right? It didn't close this distribution, can you see? If there is something serious to the downside, now we have volume here. There's one thing. We have the potential to be a counter-action to overnight inventory. At this moment is history. This is, to me, it's not relevant anymore. Has lost its, most of its relevance now. This overnight. But I start seeing this distribution. The market will build value here below, and will not close the distribution here. That's for a short term, very short term. Yeah, because we still have an inside day, and the market is forming a 3-day range here with these highs. This time of the market, I don't feel safe here. That's what I have. The overall context is I don't feel confident. I don't know how to say this. I guess the original word. I don't feel that safe in this time of the market. I also have this idea that this market somehow before Friday, which is only one more day, could be around this area here. Here. So we have PC, you can just shoot, has a big rally depending on the number, or a big break. And the better position for that is around this area here. And that's a bias, right? That's something I have. Because in that way, we don't have excess in the high, no excess here, no excess here, and also the low. Weak low, no excess here, no excess here, no excess here. Nasdaq has an inside value right there, 10 minutes before the closing. And it's a day to the downside, The short that we had at the opening, right now I feel like it was less risk than the short that we have now. Notice how tempo has, how the pace or the strength of the movement kind of like it's very slow now, right? Relative to what we have at the opening, what we have in A and B. It's very slow now. And we don't know for sure who is controlling the market, right? There are going to be days when that is going to be obvious, and you just go with that, right? You see this. The best days is when you don't see that actually, and and that's an indication that short term are not in control, but bigger time frame participants are behind the movement, because you will see this kind of like trend in days when you have a movement, you know, you have a movement, the market push its way, either to the upside or to the downside, push, and then they just stop, and they let the market breathe, let the market retrace, let the market rally, do the pullback, and then start. You can see the change, right? You can see the change. The push starts again, and then the market starts to have extension in the direction that whatever is happening, right? And then that stops, and then you can see the how traders start to buy if there's a break, or start to sell if there's a rally, right? This is my time. Start fading the market, and then come back again. It's really. I hope you have seen those kind of days. So at the beginning, it's really hard. At the beginning, it's really hard to identify, and it's really hard also to get to hop into that kind of days, into the movement, because what happened is we have past experience hurting, right? The pain that we have from the past traders that didn't work when the market actually, when the direction of the actions changes. The direction of the action changes, and you hold, the market just keeps going against you, keeps going further against you. And we cannot get rid of those things. The pain stays. We remember those things. Now, going back to the type of traders, right? This market is breaking, right? We have a direction to the downside. It is an inside day. We have all that context, but the market is going lower. The direction of the movement is to the downside. The trade is to the downside. Right now, value is also overlapping lower. The trade is to the downside. So why I would like to go long here? If I go long here, that makes me, if I have that mentality, if I am thinking to take a long, that gives me and puts me in the category, in that side, that type of traders, right? That are fading the market. Doesn't matter what the market do, but I fade the market. I fade the movement. And the odds of success doing that are low. If you do that, just take notes, see what happens, see what happened before, how many times you had a good trade, how many times you did have a bad trade, and just do your numbers, no? 50%, 60%, 80%, what is, what are the stats for your trading? If it's not good, but there's something that have to be adjusted, right? Some adjustment that we have to make there. If it's working, okay, then you have it. And just keep doing that, or improve, or find a way to improve that. But if not, it's I think it would be good to consider doing some adjustments, right? Now, because now you have identified what is the issue, and also you can also formulate, the place or the work that you need to do, where you want to be, what you want to do. And doing that is, it's not easy also. Once you identify, it's clear. Sometimes it becomes so clear that what we want, what we must do, but it's really hard to implement. It sounds easy. It's so easy, to speak about that, but it's really hard to do, because those are habits, right? And most of the time, a lot of times, it is counterintuitive to what we are as humans. Um, Another thing that I didn't believe at the beginning is, the market gave us 2 or 3 opportunities a day. One, two, maybe 3. But we don't know when these opportunities are going to come. No, we just don't know when it's going to happen. And being in front of the screen, not being trapped by prices, I think is the first step here in the process, right? Because we can get very emotional here, very tempted to go with the movement, right? No, the market has a strong opening to the downside. Stop opening, it has downside continuation. Now I have to be short, right? I'm absolutely short. This is going to be to the downside. That's a trap, right? That's the trap. That's how the market trap us. That's how we get trapped by price. You will also we'll see that you become very anxious, right? Another thing that this is very personal, right? I become very anxious. Boy, I'm going to miss this. But I knew what I had to do, right? If I become anxious, don't do anything. Don't do anything. If you can leave, if you can't do anything, leave. Just leave the trading desk. Go away. Walk away. Do something else. I knew that's what I must do, but I just stay. I stay. I may see something. That's what I thought. Right? I thought I will miss the opportunity. And of course, at the end of the day, it was a bad day. Because the opportunity may have been there, but I wasn't ready. I wasn't prepared. I may have done my homework, may have done all my observations, may have my thesis or whatever, but mentally I wasn't ready. The mechanical part of the job was done, but I wasn't prepared to take action. My body wasn't ready, my mind wasn't ready. And then I started, whenever I feel anxious, I just leave. If I cannot control myself, I just leave. If I get tired, I just go to sleep, right? I rest, I start to, do something else. Just leave, usually a nap. Because often also I find myself napping in the chair, in my chair. And that's, you can sleep there, but you don't sleep well. I mean, that was my experience, right? Some people, my father my father could sleep. My father can sleep in really weird positions, right? And he can be there for hours, right, with his neck twisted, with his body, in weird position. But I can't. So it's just adding more stress. If I wasn't ready, I wasn't tired. If I don't sleep, I don't rest properly, that just adds more to my anxiety. And the market is going to be there. When you come back, the market is going to be there. If you miss the opportunity, so what, right? Tomorrow we may have even a better one. Now, look, And gain is coming from hard back here. They tried really hard to break this market yesterday. They had it. Now I wonder what can happen if this market gets too short here. Because the trade today is to the downside. No, value is lower. Trading in the direction of value is the best thing we can do. Value is lower. It's an inside day. I did something here. But after that, and I did that, I explained the reasons for what I did. Okay, now Nasdaq has an inside bar. It's about to take. This is interesting. This market is interesting here. This is a nice inside bar. We have a wide range, now an inside bar. What's the direction? What is the direction of the day? To the downside, right? So, go with the break of the inside bar, preferable in the direction of the trend. So, what trend do we have, right? What trend do you choose? The intraday trend, the longer time frame trend, what? Nasdaq actually has lower value, not overlapping. Nasdaq has lower value. We might have something here. I'm taking this trade here. If this market takes this low here, that's the stop here, right? I don't want to see the market coming back here. Once this low is taken, I don't want the market to come back in here. This kind of scenarios here, when that happens, it's better when this happened in the ES, right? We have a really nice wide bar, and the next one, the inside bar is a really small one, just like here, right? Here one, and this is small and right at the center. And the other thing is, we will have markets in sync. And being present in the market that's the hardest part of this job. Being observing, watching. POC is down here. This is POC, right? Oh, look at this. This is a trading day. Wait a minute here. Wait a minute. Wait a minute. Come on. This, you got 1, 2, 3. Very uncertain markets here. Have you done anything? Oh, I got a question for you. If you are still there. Yeah. I got a question for you. And this is something I want to ask you. I guess it was this. I don't know where it was. I don't know. It was this day. But you had a trade here. I guess it was this day. You had a trade here. And you went at the highs on B. You went short here. You got value lower here. The market shooting out. Market getting out of previous day range in single periods. The market getting no, that's not the case. This is a market getting out of balance, right? Opening here at center and shooting down, that's another thing. But opening down here, getting out, that's completely different things. So why you went short here? We talked that this was a good trade. In hindsight, right? We had a good trade here. We also say that this was a slow trade or an anchor trade. But what were the reasons you you took this trade? This make me think that you have some time in the market. You know, you were how many years are you were trading? You were trading 5 at the four contract white on high B. 4 contract white. Oh, so you went for you you took a trade with 4 contracts here. But what was the context of your trade here? So why you went short here? I didn't ask you that. I forgot to ask you. Look at this, man. Look at this. It's coming back to this. And have you planned your exits? You know what? Did you have an expectation of what the market needs to do, or what needs to happen, either to take profits or to close the trade? You know, if it didn't work. Yeah. So yeah, it came back inside range. You know? It was kind of difficult here too also because it came back to the center of this range. I mean, to center of the gap, and that's a typical also. You know, the market counts just it didn't close the gap. Sometimes that this can really trigger some serious short covering rally. We come back inside the range and just feel no acceptance from traders, no acceptance to the upside. I mean, um, it came back, it came out, and then which gave you a profit, but then it came back inside, right? That's what you say. Uh, but it didn't. Did it came to your original entry? Did it came back to to your original entry? Uh, yeah. Yeah, that's one of the most important things we do, and actually what I try to do all the time is monitor the market for continuation, right? Even for example, right now, I am flat. I don't have no trade, but monitoring what's happening. Does this market have downside continuation, right? It is having downside continuation. It is kind of like a struggling here. It is struggling. It has good odds of having downside continuation because we have a 3 period wide here in the lower side, for example, right? So this market can come, and these distributions are being kept open here. The market is not closing the distribution. It's getting weaker. No. Okay. Uh-huh. Which makes me think that you are trading. You have some experience. You have years trading because you have this feeling. you have this feeling that of acceptance. You know, that when you say traders are, you know, well, the market traders just were not having it, right? As you say something like that. What you say was, yeah, no acceptance from traders. When it came back and had no acceptance for traders, you meaning that the market was not having it acceptance in the lower side. That's what you mean. Yeah. If you and this is what I do. I don't know. I don't know if this helps, right? For example, this day, in hindsight, is easy. That but we cannot do that in hindsight. I have many doubts about this day. And when you say you took this one, this is a really good entry here, somewhere in here, right? Even the market takes the opening. I'm monitoring the trade here. So far, the market is out of balance. The market took below. The risk here is just let's take a look at this trade here. You know, when you measure risk, you have your trade. Let's see between this area, right? Between this area, it doesn't matter which you know, just in this area, or at the high, somewhere in here. This is the previous day range here. This is previous range here. We'll have an opening. The market shoots right down here. What I question here, this gap here, we have an upside gap, and this is what I see quite often. You know, and coming exactly to the halfback or around the center of the gap, many times what follows when the market doesn't close the gap, what follows is shoots by. This is some, you know, violent, vicious short covering that can happen after this. I don't remember how this day trade. Because this how this market traded also has significance in this day, but I can't recall that well. But once you have this trade here, continuation, we see the market coming back outside this range and closing the gap, right? And what the stop is, you know, and this is the risk, right? This is the risk we all take. This is the stop. As soon as the market gets closer to this high here, that's an out. You know? We know that one tick or two ticks here, leaving these two ticks, is still technically good, but coming way up here, the risk increases considerable, and coming up here is even, you know, more risky. This is a sign that the trade may not work, or it's a risk, you know. And this is the area to get out. You know, the market telling you know what, watch out, and letting you know that just get out. And what I usually do if I have a trade like this, I move my stop. You know, I may let's see, I may enter here, right? It's very rare that you got the high, but let's see, I got here. It took this low. As soon as I have some profits, I just move it to break even, or sometimes just depending on how the market is moving, depending on how the market is moving, I will keep it up here, or I will move it down here. And depending is the key word here, right? If you recall this day, today, this is easy to remember. Do you remember the tempo that we had here in this area, in A and B, and and compare that movement, how the market was moving here, to how the market is moving now. Right? That's a change of pace, right? The conviction. I would say change of tempo. Tempo's change. When if this movement, I don't remember how this happened, right? But if the movement remembers the same, there are, that's when I keep this up here. But if it changes, whatever happens, it changes. The tempo here changes the tempo here changes relative to what happened here. That's when I move this lower. That's when I consider the risk is increasing, and I move my stop. Okay? To break even, or maybe one tick be just to cover commissions there. And a lot of times the market comes back to my stop and just keeps going lower, right? But that's what I decide to do. When it works, it is well it is worth, right? And you always monitor for tempo. The area, now the exits, right? And this is why we do homework. The exits. One of the things is monitoring the market for continuation. Let's do this again. Once you have a trade, I monitor the market for continuation all the time, which makes it easier when you are in a trade, because you don't change anything. I just don't start to monitor the market once I have a trade, but I do that all the time. Let's close this. Oh no, let's open it. The references have changed, but we may do something here. One, two, three, four. 1, 2, 3, 4. This is this day, right? Higher volume here. We have higher volume. The first period has higher volume. The second period decreases a little bit, and the third period, there's a decrease of volume. There's decreasing here. You can see that's changing here. There's no volume coming here. The market is lower, but no volume joining. What's happening now, for example, is different to what happened. What's happening today, what's happening here is different to what happened here. Speaking in volume terms, right? Monitor for continuation here. We have the gap held back. This is also I check in gaps. I usually kind of like try to see where the center of the gap is. There's something that can happen here. The next thing, monitor for continuation, is taking this range, getting the market getting back inside this range. We see here the market get really close to this high, but it just doesn't take it. C counts is bottom there, D counts is bottom. This low is questionable, but when the market takes too much time to take a reference, a very obvious, visible reference, the market is in fact rejecting that reference. Right? Oh, but what happened here? Right? But in the short term, in the trade, what you are doing, what we are doing is short-term trade, right? We are intraday, we are daytime traders, we are day traders. We are not daily time traders, right? That's another time frame. What we do is something different. Right? I don't know if you do trades that are daily, maybe weekly trades. This could be if doing another type of trade, This can be something, you know, if you have a position into the downside. Okay, there are good odds the market can take this low, right? Which it did the next day. Keep monitoring, right? Keep monitoring, but that's a different time frame. That's a different time frame. When a market takes too much time to take a reference, which is this one, the market is in fact rejecting that reference. So if I have a short here, so the odds, while I see this poor low here, the odds that I see something like this. Let me show you what. You know, and you'll see this quite often as well. What is this? What the heck? Alright. I have this low, right? The odds that the market do these things like this. Come on. Take this reference out, you know. Forget about this one now. The market doesn't care about this reference. Right? It's taking just too much time. Take that reference out and then do an upside movement. It doesn't necessarily mean that it's going to go higher or it's going to take this one out. It doesn't mean that. Right? But the market just, you know, kind of like, you know, rejects. It's rejecting this reference. It's just rejecting this area here. You know, at least not today, right? Not in my watch or something like that. That's something really important too. And I started monitoring the trade for continuation. And that's why you have this reference. You know, one is this one, and the other one is this one. What else do we have here in the lower side? In this day. In this day, we have this distribution high. No? If the market comes back inside here, the next thing is this low side, followed by the closing into this distribution, right? Closing this distribution puts the market back inside this range, which targets the opposite side of this distribution, which is the low of this day. This is FOMC day. Now today, what do we have today? Let's open this a little bit more. Let's move this in over here so we can see what's happening and also talk about this. We have, this is very clear. This is it's not an easy day to begin with. You know, we have a downside spike. This spike was rejected when the market opened way up here. Again, we have this area here, right? This reference here in the upper side. A good location for something. Whatever you want to do, this is a really good location here for the short or for the long. This is a good location. If the market takes this high, I go long here, and this is my exit, right? Location. The market doesn't have to come back all the way down to here for me to know. You know what? My trade may be wrong. I know I am wrong as soon as the market takes this one, and I can place my stop there or one tick below, and that's it. It didn't took this high. At the same time that this was happening here, and that's why I watch these markets. This Nasdaq was having a really hard break here. It opened inside right at the previous day, but it was breaking hard. And sometimes these markets, you know, one market trades in sympathy to the other. But this was, it just didn't stop. It just kept going lower and lower and lower. It keeps just going lower, right? And that gave me something. And actually, I didn't go short up here. I did my short somewhere in here, in this area. Most of the time I don't know when I'm short. I just go with the market, but I have this in mind, right? I have, in this case, I have in ES, I have 3 points. Today I had a 3 points stop, or a bracket of 3 points, 8 and 3. And I think, I don't know what happened here. I guess it was something like 3 some. Yeah, I think it was good enough. 3 was good enough here. The first time I was stopped, as soon as I moved my stop really really quick. Market stopped me out, but then I re-entered. When the market didn't take this high, I re-entered in the same area, the same stop. And the next time I have a better thing. You know. But I moved today. I move it kind of like fast because of what happened yesterday. There was a rejection of the spike, and also that this market could have a really nice upside movement. Were good as well. It was really good because of the rejection. The other thing that I had in mind is all this inventory. All this inventory is long, 100% long. So there was potential here for the market. There was fuel here. No, saddle is down here, way down here. This is last, where the market is at right now is last. Is this level here, last. And notice how last is different than saddle, right? There's a big difference between last and saddle. But there is no more supply here from the overnight. Right? You have another. And to monitor the trade, I say I did not use this distribution now as a reference, because this was a reference for a movement that went to the upside, and the market opened up here. This is not a reference anymore. I don't check that anymore. If I see buying, selling in this area, market stopping here, that's a sign that that can be short-term trade, very short time frame trades doing that. If that's the case, right? But I don't consider this a reference. The reference that I consider here is half back. Here the market stopped right there, but there was a lot of back and forth. Or was I checking Nasdaq? Don't know. And notice what's happening here in this area. Right? How much time the market is taking to take this area. Because this is a reference. This is the last here. How many attempts the market did? Stop here. Very mechanical buying here. They are buying here. Took this period for 2 ticks. Kind of stop right there. Now it's stopping there again. Yeah? It's different than yesterday. It's different than this day. This day didn't have volume. If you check this day here, this day didn't have volume. And that's what makes this today different to this day. Can you see how there's many things that are not similar? They may look similar, but are not same. No, I know. I don't look at the volume of the period itself, but I know there are people that check this volume. They actually may have something like this when they check each volume, each period. I don't do that. That's another. But I know the some trades. That would be something like. It would be something like this. If when people use candlestick charts or bar charts, they will use this volume here, for example. But I don't do that. What I notice here is this usually is like this, right? It repeats over and over, and that's why I don't look. Traders that are short, that are trade like 5 minutes charts, I think they pay more attention to that. Now volume is a little bit lower here, maybe 20, but still high. What's the volume here? 20%, yeah. 19%, that's not bad. And the action remains to the downside. Well, I'm glad to be your help, man. This is, I really enjoy doing these things when there's somebody on the other side because it's very boring, brother. It can be very boring here. Got to be watching this, you know. And there's, I know, when you become bored, sometimes you do things just because you are bored, and that's not good. Oh, the boy in the right, this one. Yes, I watched this one and this one. This is what I watched. I can see, for example, this volume coming here in the lower side of today's profile, which is an inside day. That's it. And this is what I watch the most here. Where the volume is yesterday also it was a really nice thing yesterday when we had this. I think there was a break here when the market, because volume was building higher here. Volume was building higher, but it was curious there because volume was the way how it's made is an indication as well. It was, let's take a screenshot again. It was exactly from hard back here. About those here, the next period, it was also, but it was going higher, right? It was going higher exactly from hard back, right there. And then out of, you may say out of nowhere, right? The breaks comes, right? This is another way too. It's not the light trade out there, it's an indication, right? That's, notice today, for example, right? Let's check today. Where do we have volume? Up here, hard back is here. Where do you have volume? Down here, hard back. This is, we may have some coming right from hard back, but there is something here at the upper side. This is right at the center, the inside bar. Do we have an inside bar? Yeah, previous period was an inside bar. Huh? Previous period was an inside bar. I didn't see that. Come on, man, I didn't see this. Okay, all right. An inside bar here, and right at the center, right? Right at the center. It dries at the high, it dries at the low. Here, even though it's just opening, it's the same thing. Why this is different, right? This is different. The way how I assume Jim, because he has a long time in the market, he remembers these things. Like he actually doesn't need to see these kind of things. What he sees is, you can see it here. Let's take this one out of the way. Too much there. Here, right? You got reds here. White, low volume. No interest here in the upper side. Low volume. Right the center. This is a breakout of the inside bar. Trade to the downside. As soon as the market takes this low, that's an exit. If I trade in that, there can be something here though. Well, no, that would be looking for a trade. This is looking for a trade. This is what looking for a trade looks like. Okay, I'm gonna show you something. It's looking for a trade. I want short this market because it's going low. If the market comes back up here, I will leave 2 ticks and go short here. As soon as the market comes back out to my entry, maybe I place my stop 1 or 2 ticks above, maybe 1 tick above this, and that's it, right? That's really looking for an entry. But there's also trading with the market, right? The tempo is really has a really slow tempo. It make me think, right? It make me think about the rejection of this spike, how this spike was rejected. It makes me think that there's nothing here, and notice how this is starting to look like as well. It looks like long liquidation now. You know, this spike was rejected. Market open up here, and it's still, we are still inside previous day range. And for me, I have a, this can be a trade. I don't know. This can be a body trade because it's going to be above POC. It's a trending day. It's a trending day to the downside. Taking this high out changes the structure of the market. It's still potential to the downside as long as this distribution is not closed. The market doesn't trade up here, right? But by the time this happens, I will be too far from my entry. That's too much, right? That's why I will put it here or 1 tick above, and that's it, right? It's not much risk there. The risk is low. But what I will be playing there, right? What I will be playing there is downside continuation. What is happening, right? But I am betting there that this market is going to keep doing what it's doing, which is a trade to the downside. Notice what happened to value. And what happens when you have value lower? Traders sell the rallies, right? There may be one rally here, another next rally. And now look at this, something here. Assuming this low stands here, if the market comes back here, I just said that if the market keeps this distribution open, it still keeps the potential to the downside. But if it comes up here, this hardback will be really close, which increases the risk of short here. Right? First, I am looking for a trade, and then the risk is also the risk. This can be risky if the market, if there's a rally here. If there's a rally, another area to sell can be this, right? But coming up here, look where the market would be if the market comes back up here to sell a rally in this area. We know now that this is a weak area, question value to sell. What can happen here? Puts the market really close to this height, which is a questionable high. Okay, let's sell from here then. What do we have here? It's just keeping getting worse and worse, right? So that's how I plan. I plan the trade. Not that I am going to trade, but if that happens, I know now that selling can be actually not such a good idea today. Selling a rally, right? Can be. I might be right. I might be wrong, all right? And I always try to remember there's nothing wrong with being right or wrong. There's nothing wrong with being wrong. The thing is that I am wrong, right? It's not that you are wrong and I am following you, right? And I don't know why I'm wrong. I can be, okay, it didn't work. The market come up here. The market may come up here. I just deciding now, right? This is kind of be too risky here, right? Because if for my trade, how do I know that this can be the rally to sell? Is if the market doesn't take this high, right? But I see the potential to the upside here. So this trade, selling this rally can be risky. But the market can sell from here and come all the way down to here. That would be, I am accepting that. I am accepting the possibility the market can do that. All right. And I will not be part of that. Now this day has become the same as this one, this one, this one. Very slow there. Now today is Wednesday. There can be some positioning here. There can be some positioning here. Tomorrow, we don't have anything. What do we have tomorrow? GDP. I think this is the most important thing this week is core PCE on Friday, and today we are Wednesday, so there is some position here, some hedging that can be going on here, and when you do that, the best thing is narrow ranges, and this is something that's changing now, what I'm watching now, and this is, let me tell you what it is. Usually, all up to today, what I have seen is these markets, having big breaks or big rallies, just followed by the opposite. If there was a big rally, there was a big break that followed, if there was a big break, a big rally followed, in the days previous to the announcement. It happened here. FMC, the last non-farm payrolls also happened. That I don't see it. I don't see now. I do not see that now. Now this is my entry, right? Look at what the volume is here. Higher volume here in the lower side. Oh, something else that yesterday, why I took this short here. I don't know if you have this, or somehow you may have this. Let me see if you can take this to where it is. I guess I took a screenshot of that one too. Oh boy, no, I did not. I thought I did. What? Oh, come on. No, I don't have it, unfortunately. But this is, I guess I can show you here using this. This is what and this is how the market gets short, how inventory gets short. I saw something like this, right? Something like this. But it was, that happened here. Yesterday it happened here, but it was to the upside, or it was positive. Something really big baiting to the upside, but the market just overrun. That was the market just ran over those over this positive here that was here, and that was a false indication actually. And then when I saw the market just taking this and having some gaining momentum, that's when I decided that play out, the volume play out too, on what happened during the day also played a significant role on that thing. Now, when whole markets gets too short, do you remember when I said this will be looking for a trade, right? I want to be short, why I go short, right? I will find a trade. I go short here. Next time, oh, I don't have that much. Next time I'm going to short here. As soon as the market takes this high, I'm out, right? I'm going to short here on F here. That's how inventory gets too short, right? You can see that's sailing here. So the risk in the short side starts to increase. That can change, right? If there is something happens here and POC moves lower, that out, suddenly that's not that important anymore because POC has moved lower. Right? It doesn't look that bad now. If POC instead of being here is down here, this it wouldn't look that bad, right? Because it wouldn't be a 50% chance. It wouldn't look that bad. Actually, it would be higher than POC, better prices to sell. Right? There's nothing here. I guess, oh boy, it's really nice, it's really nice to be here with you. What I'm going to do, I'm going to get something to eat. I'm going to call it a day. Unless you have any questions or comments, man. Let me tell you, I'm really pleased. I wish you the best for the rest of the day. Stay safe. And we'll see you tomorrow.